One of the most common questions I get is, Paul, what should I invest in? And I never am going to tell anybody what to invest in. I don't know your personal situation. I don't know anything about anything going on. But I will tell you is, first things first, here are the investments you should avoid. 1, things you don't understand. Now, you've heard that cliche before, but it's absolutely true. If you don't understand how something's going to make you money, you have no idea how it's going to lose money. And I mean that in the sense of just because somebody says they're an expert. I recently had a call with somebody who was starting a crypto fund. And he literally said, I'm a crypto expert. And I thought why is he a crypto expert? So I asked him, what makes you a crypto expert? Well, when he explained this process, it was basically trading crypto. Had nothing to do with fundamentals of crypto. So you're not a crypto expert, you're a trader, which I'm okay with that. But he had no idea how he's going to lose money in investments based on crypto. So that concerned me immediately. That was a big red flag for me. We looked at the company the other day. I don't remember what company it was, but we did a video for our community. We do private videos for our community. And somebody requested a stock. The video was less than a minute because I literally looked at the financial statements and said, I have no idea what's going on here. I'm out. If I don't know what's going on and can't explain it, I'm out. I have no idea how I'm going to lose money then. The more complicated it is, the more I avoid it. I do not understand banks or insurance companies, so I avoid them. Just because somebody says they understand something doesn't mean they actually do. Find the people who are willing to say, this is out of my sphere of competence, I'm out. I've only met one person ever who can explain banks to me. If you see anybody on the internet claiming they know how to analyze banks, they're probably wrong. Be very cautious about their very complicated matters. This is why in 06 and 07, very few people caught the financial crisis. Why? Because those financial instruments are very complicated. And people were calling them crazy back then. 3, avoid all crypto if you believe in long-term wealth creation. Right now, there's no intrinsic value to crypto. Does that mean the crypto can't go up? Of course it can, but it's nothing to be done more than trading. Until I see a consolidation of crypto and some sort of substance behind it, I'm avoiding crypto completely. Because all it is data. Just like in 2000, just having a website made you a $100 million company. That's terrible. That's absolutely, absolutely terrible. It doesn't work. So if you're new to this video and this channel, I'm Paul. I'm a value investor, a true value investor. I don't just say the words. Go watch all of our videos. I wasn't buying during the hype. I was being criticized on the internet from those people who said I didn't understand investing. I hadn't made much money in stocks. Those people are all now absorbing 70, 80, 90% losses on their investments. Yes, I made a few percentage points a year. Would you rather make a few percentage points or lose 80%? I'm quite sure I know what the answer to that is. I have a process. And unfortunately, in the value investing world, having the right process means when things are sky high, you look stupid because you're not buying. And when things are down low, nobody wants to buy investments, you look stupid because you keep buying. You always are going to feel stupid. People are going to call you stupid. At the end of the day, Warren Buffett's been doing this for a very, very long time. And over all long periods of time, full bull and bear markets, he still wins with billions of dollars invested. Our process is to invest like Warren Buffett. We believe in growth. We just don't believe in overpaying for growth. We believe in hype. We just don't believe in overpaying for hype. We believe every investment is the present value of all future cash flow. And if you're always making those bets based on the rosiest assumptions, you will have problems. If you're making the bets based on lower assumptions, yes, you will miss out on the home runs, but you'll also miss out on major strikeouts. Your goal as an investor is to wait for the right pitch and then swing. You're given unlimited swings, as Warren Buffett calls it. You can sit there and take every pitch for the rest of time and only swing 10 or 15 times, and you'll probably do pretty well. I'm trying to teach a new way of thinking. Ask me the question of, why is that an appropriate amount of money for that company? I believe that a stock and a company are different things. But when you're buying a stock, you're buying a piece of that company. But the stock price can go up irrationally and go down irrationally because the market is irrational. It's usually swinging from one end of the pendulum to the other. Extreme optimism, extreme pessimism. Right now, I think we're right about here after the recent fall. I don't think we're anywhere close to extreme pessimism. There are people out there who said, oh, this is the most pessimistic I've seen people. No. I need to see everybody giving up in the streets. I'm not buying. This sucks. I hate this. Stocks don't work. I remember in June of 03, and go look at the S&P chart. Remember in June of 03, a woman at my college said, well, you shouldn't invest in stocks unless you want 2 or 4% returns a year. I didn't realize it back then, but you go look at June of 03, that was the bottom of the market. I remember I was on a work, we were in college together, but we went on a work trip together. And she said that, and I was just like, what? I was like, stocks do 9-10% a year for all of time. I didn't understand what I understand now, which is that should have been a sign to me that we're probably at some sort of close to bottom. It just happened to be at that time. That's dumb luck. But the point is, we need everybody to give up. We need everybody to go invest in Coinbase, invest in Tesla, and have it keep going down. Have it invest in Peloton, still going down. That's the key here. Because irrational times do not last forever. But irrationality is on both extremes. During the Great Depression, there were many companies that were selling for, you could literally bought the company, liquidated the bank account, paid yourself back, and still had profit. That's how irrational it was on the other extreme. I'm not saying we're going to get there again, but I'm just saying it to get to some sort of remnant of that where everybody says, this is stupid, I'm not buying this company. I personally think that will happen when Apple and Tesla are going at lows or people are giving up on those two stocks. Because those two stocks are the poster child of this bull market. The other poster child of this bull market is Bitcoin, crypto. But I think that will go to zero at some point. Unless the US government comes in and adopts one of the cryptos as their own, which would just be a way of getting people to distract them so they could ban all of the crypto. So what I'm saying makes sense to you. Listen more, watch our videos, subscribe to the channel. This is a new way of thinking. If you're like me, and 20 years ago I heard these words and said, that makes sense. It wasn't overnight that I became a value investor. It's a constant learning. I'm 41 today. I'll be learning until I'm 100. That is my goal. And I've been learning for the last 30 years about investing. The last 27 years. I started when I was 13, 14 years old. But the point is, the learning starts today. And you have the tools of the internet, and you can get the tools of our community on our website, everythingmoney.com, to talk to other investors like yourself, to be around like-minded people. The 5 people you spend the most time with is the people you'll end up being like. Have them be our people. If you like what you saw, we did a video on value investing in 2022. Click on it, check it out. Thank you very much.